Hello, I'm Richard Murphy, and I am talking about why we should be taxing multi-millionaires more in the UK. This is one of a series of videos on that theme, and there are links to the others below this video. In this video, I want to talk about something which may be a little controversial, but I think is important. And it is that I believe that we should charge capital gains tax on people's estates when they die. Right now, in the UK, we don't do that. We do charge people's estates to inheritance tax. Now, I'm going to talk in a separate video about inheritance tax. It's not a very effective tax. It's very bad at collecting tax due from the wealthiest in the UK because they tend to be able to avoid it. But at this moment, I'm going to talk about something which is as important, and that is collecting capital gains tax on the estates of those who die. Why do I want to do this? There are two fundamental reasons. One, why should a tax charge be cancelled on death? After all, this is an event in life. We are all going to do it. It is therefore a part of life. And people who hold assets to death can avoid all capital gains tax charges at that time. The asset which most particularly avoids a capital gains charge at that time is people's houses. Now, the one thing that we know is that once you're dead, you don't need a house. I do entirely agree that your spouse, your civil partner, and maybe some special categories of dependents or those who have cared for you might have a continuing need for your house, and therefore a charge to tax should of course be deferred if they continue to live in it. But the truth is that at some point, the occupant of a house that has been used as a home will cease to do so because of the death of that occupier. And the house is invariably sold at that point. The number of people where the house is passed on to the next generation and they then move in is tiny. This is a myth that the English person has a castle. Well, we don't. Nor do we move into our parents' homes when they die and vacate them in the vast majority of cases. Houses are sold, and of course that's normally because there are multiple people who might benefit from the estate, and therefore it's got to be split up, and therefore the only way to do that is to sell it anyway. Why is a capital gains tax due on a house at that moment? We have a system in the UK where we provide extraordinary tax relief to a person throughout their life so that they need never pay capital gains tax on the increase in the value of their house during their lifetime. And that increase in the value of a house during a person's lifetime is now potentially dramatic. I checked before making this video on the cost or the current value of the first flat that I ever bought when I lived in Tooting in southwest London. A long time ago, I bought a 3-bedroom flat when I was a newly qualified accountant for £28,500. It's now worth over £450,000. If I still owned that flat, and I don't, if I did, you can see that I'd have made a gain through no effort on my part, apart from paying a mortgage, of over £400,000. If I still owned that asset at the time of my death, that would now be deemed to be tax-free. Let's ignore inheritance tax at the moment. As I've said, I'm dealing that with another video. My belief is that that gain should now be subject to tax on death because we no longer need that property. Now, if my partner was living in it, we'd defer that. The charge would be deferred until they cease living in it. And I actually, by the way, think that this charge should be made if a person simply ceases to live in a house. So, for example, they sell the house to go and live with their children. Then that is deemed to be a final occupation as well. So we would have to put a period after sale during which reinvestment had to take place in another property, or else it was deemed to have been sold on death and a capital gains tax charge would arise. What I'm trying to say is that so much of private wealth is now invested in private houses that we have to have a mechanism to now tax that wealth, to have a chance of deflating the value of housing so that young people can have the prospect of actually buying their way into owning their own home. Unless we begin to deflate property prices by charging tax on property, we will not achieve that goal as far as I can see. And I'm seeking the fairest way that I can to introduce that tax charge. And that, I suggest, is by introducing a charge when people die or cease to have use of a property on a permanent basis because they no longer need it to live in. And when that happens, I'm suggesting that tax should be paid. What tax should be paid? Well, actually, the tax on their overall gains from owning domestic homes during their lifetime. Of course, when I sold my first flat, I bought another house. I paid for extra for that house over and above what my first flat had cost, and so overall I have a cumulative cost throughout my life of buying houses. But my cumulative cost at my stage in life of buying houses is less than the value of the house I now live in, by some way. I have benefited from having a property which is worth vastly more than I actually paid for it, even if I take into consideration all the steps that I went through to get here. And most of us don't make many house purchases or sales during life, so this is not a complicated thing to work out, and we could therefore charge a total sum to capital gains on death or on ceasing to occupy a house on a permanent basis at the end of a person's life. In that way, we would create a more level playing field inside society. We would create an intergenerational equality which is currently absent. We would change the price of housing. We would collect a tax liability at a time when it was appropriate to do so, and we would, as a consequence, create a fairer, more just society for the benefit of everyone. I know I'm being controversial, but we have a problem. We have a problem of young people being denied access to housing seemingly permanently because we will not tax housing. We have to tackle that problem, and the only way to do so is to tax housing. And what I'm trying to do is recommend a way to do that, which is as fair as possible, and that is to charge capital gains on people's cumulative lifetime gains on property used as their homes at the time of their death, or at the time when they cease to permanently live in a property for their own home. Think about it. This is what fairness looks like. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.